Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Analyst at GDMFX with the Morning Outlook. Today is an extremely important day on the economic calendar. We'll talk a little bit more about it later into the session, what's coming out. Right now we're starting with Japan. The yen weakened versus the dollar after the central bank Kudura said a stronger greenback wasn't particularly negative for the Japan, but the Bank of Japan kept its record stimulus unchanged at the conclusion of a two-day meeting. Now, maintaining its pledge to increase the monetary base at an annual pace of 60 trillion yen, that's approximately $570 billion, to 70 trillion yen. Now, Asian currencies headed for their biggest weekly decline in more than 2 months as demand for the dollar rose on the widening interest rate gap. With the euro, of course, ECB President Mario Draghi lowered the benchmark refinancing and deposit rates yesterday to 0.05% and minus 0.2%. Respectively, sending the euro down to $1.2921 per euro, with 1.6% down for the biggest drop since November 2011. That's more than 200 pips down. Now, a report today may show U.S. employers created 230,000 jobs, new jobs last month after taking on 209,000 workers in July. The U.S. service business expanded at the fastest pace since August 2005. The Institute of Supply Management's non-manufacturing index climbed to 59.6 from 58.7 a month earlier. Sterling also fell to its lowest level versus the dollar since February, weakening as much as 0.8% to $1.6285 per pound, as the Bank of England kept its policy rate unchanged. UK demand for workers rose at the fastest pace since 16 years last month, boosting pay growth and supporting the view among the Bank of England's minority that it's time to raise interest rates. Gold in the commodity sector headed for a weekly loss after sinking to 12-week low as the dollar strengthened ahead of data that may back the case for higher U.S. borrowing costs at a time when the European Central Bank is boosting stimulus. Now, the metal fell to 12.59 on U.S. economic data yesterday. The ISM non-manufacturing PMI came out positive at 59.6 for the month of August from 58.7 for the previous month. West Texas Intermediate headed for a weekly decline as U.S. refineries reduced operating rates at the end of the peak season of gasoline demand in the world's biggest oil consumer. U.S. gasoline stockpiles shrank by 2.32 million barrels to 209.99 million during the week ended August 29. In the report yesterday from the Energy Information Administration, that crude supplies also shrank by 905,000 barrels to 359.6 million. They were, of course, projected to decline by 1 million barrels. Today's economic calendar, as I mentioned, is also full of important data. At 9 a.m. GMT, GDP year-on-year and quarter-quarter for Europe. Also at 12:30 GMT, very important for US, non-farm payrolls and unemployment rate, and also for Canada, the same news. As we saw yesterday, the Canadian dollar strongly appreciated against the euro in the yesterday's trading session. That's all from me from today. Keep an eye on the economic calendar for all traders and investors. It's an important day of the month. Thanks a lot for joining us. Bye-bye.